What's up, everybody? It's the Wall Street Custodian coming back with a video, and it's been a minute. I know it's been about 2 months, guys, since I've last made a video. And, without going into extreme detail, there's a lot of reasons for it. I had some medical issues personally, my father, I do have a career, and the market is just, it's been a rough time. It's just, there's a lot of craziness going on, and that's going to lead me to what I'm next going to talk about here. So I'm back. I want to focus on getting at least 3 to 4 videos out a week. I do have a full-time career with overtime, family, and I think I really burned myself out. I'd come home, late at night from, I'm a custodian after all, right? And then I'd make videos till 4 or 5 in the morning, and then, get up by 9 o'clock, and I burned myself out. Now, if I didn't have a job, it'd be a lot easier to just continue to make videos nonstop like some people do, but I do have a career that I care about a great deal. So anyway, that's what's been going on. That's where I've been. So before we get started in today's topic, there's going to be a little change here. All right. I'm going to be talking different topics, not just stocks on the channel. I'm going to be, still talking stocks, but I'm also going to try to bring in culture, some politics, and the craziness that's going on in the world. There are times where I feel like some people have to just speak out. Normal people, not people who are radical on either side, have to just bring some common sense to the table. I've spoken to a lot of you, and let me also just take a second. Those of you who have reached out to me, especially on Twitter, with the kind words, and it gets me choked up when I even think about it. And those of you who have, told me they can't wait to see another video again. And when I presented some of these ideas about talking about a little bit more culture and kind of branching off, not just stocks, the warm reception I've had from some of you has been fantastic. Remember, none of this is financial advice because we're talking some stocks right now. Let's get into this. All right. So we're going to talk about what's going on. Wow. Jerome Powell comes out and makes some remarks, and the market drops. So what I want to talk about is, when do I see this turning around? I think the market's going to fall considerably over the next month again. I am in the bear category here. I do think there's more downside before the ultimate big run that we're going to have later on. I don't know how long the downside is going to last, but let's talk about what they have here on Seeking Alpha. NASDAQ, S&P, Dow slide as Powell testimony signals higher rate hikes. The U.S. stocks on Tuesday slid after Federal Reserve Chief Jerome Powell indicated rates could go higher than previously anticipated in the wake of the strong economic data on inflation and the labor market. So let me cut in here for a second. This inflation is being stickier than we thought. No kidding, right? Anybody who's driving down the block can just look at the diesel price. I've been saying this in my videos since months ago. You can go back and check. The diesel fuel cost is going to keep this inflation around or make it a lot harder to get it down. If you look back in the 80s of what Volcker had to do to get the inflation down, he really had to raise rates astronomically high. Now, there's a little bit of a benefit to that, right? I remember my father and my mother telling me stories about how they could put money into a CD and they were getting 10, 15% on their money. So there is other ways to make money when interest rates go up. It's just stocks become less attractive because safe options, like I just mentioned, become, much more attractive. And there's so many other options. I'm just using that as an example. So that's what happens, and that's what we're seeing. We all know this, but when do I think this turns around? And I just don't see a turnaround, a real return to a steady bull market. And I don't even think a crazy bull market. I'm just talking about a market that grows steadily over a couple of years again, until we start to see at least a pause in the rate hikes. And then that first cut, when we finally turn the corner and start to go the other way. The question is, how far away is that? I was in the camp that it would be towards the end of this year, and like a lot of people, but as we're going to see here, that kind of changed. I thought for sure the next rate hike was going to be 0.25, and actually all of our rate hikes going forward would be 0.25, and we'd have a bunch more of them. That's not what they're thinking now. A lot of people are thinking we're going to go back up to 0.50. Oof, we're going to see the S&P, in my opinion, have a big dip on that. But there's also opportunities to play puts. So remember, there's always opportunities out there. The tech-heavy NASDAQ was down 0.69%. The benchmark S&P was lower by 1%, while blue chip Dow slipped 1%. All 11 S&P sectors were in the red. Wall Street's major indices had opened largely unchanged and briefly pushed into positive territory. As a matter of fact, a very popular stock everybody's been talking about lately, TRKA. Big shout out to the Niz. He nailed this. He was telling me about this. He was waving his hands at me. Wall Street, you got to get in this at 10 cents. Really great call for him on that. A lot of people, though, have been following TRKA. Charlie Zip Trader's been talking about it a lot. That thing hit like 90-something cents this morning, but as soon as this news came out, risk-off trading returned. That's the thing. We need to see a return to risk on trading to really squeeze out some of these stocks and get all these people who are piling in short selling. If we get some better news as far as from the stocks goes with cutting interest rates, we're going to see a lot of these people close these short positions and the squeeze up of a lot of stocks, not just TRK, so many more. So this I thought was interesting here. Powell's remarks for his semi-annual testimony opened the door to a return to a 50 basis point hike at the March meeting if the incoming data flow warrants it. Upside surprises to Friday's payroll report could drive a faster and longer tightening cycle. According to the CME FedWatch tool, the markets are now pricing in a 52%, more than a half, probability of a 50-point hike at the Fed's monetary meeting later this month. The probability of a 25 basis point hike has now fallen under 50% to 47, compared to a 90% chance in mid-February. Like I said, even I thought for sure 25 basis point hikes, like the next maybe couple, 3-4 times. Look at this, guys. 50 basis point hike is back on the table. This is what happens with sticky inflation. And again, I just want to say there's so many more. Like, I almost feel like there's almost like the Fed can't do everything here. There's more underlying issues that are happening. And that's why on this channel, I'm going to start talking about some of these things. Policies that, in my opinion, are hurting this country so bad. Namely, energy. Listen, I'm all about the environment. I'm a fisherman. I actually love fishing regulations. I have watched since I was a kid when there was no striped bass in our waters to now there being abundant striped bass in our waters because of fishing regulations that slowed the slaughter of these fish by greedy companies that were just dragging nets across the ocean, right? I'm all for stuff like that. I'm all for the planet, but I'm also all for us and like realisticness. So if we're not going to drill oil here, but we're still going to buy it somewhere else, that makes no sense. Why don't we drill it here, ready? Where we do it cleanly and with regulations instead of buying it somewhere else where they don't care about the planet and just do whatever they want. I'm just making a small example of stuff that I'm seeing that I just feel like are common sense things. The diesel fuel cost right now is going to keep this inflation around and these high prices and this high grocery bills and all this stuff. It's going to stay around. We need to get that down. Nobody's talking about it, I feel. But when I drive past and I see $5 diesel fuel, I just know in my head, nothing's changing. The country runs on diesel, right? And that's just one little thing. I know there's so many more factors. I'm just using it as an example, all right? So as far as this goes in stocks, I think we have a ways to go. So like I said, I used to think it was the end of this year. I'm starting to think we're looking into 2024, maybe even mid-2024 until we start to see cutting of rates. And, not to get too conspiracy theory here, we're going to be coming up on election, and you know what's going to happen, right? The administration is going to be pushing for rate cuts so they look better, right? So we can see the market start to boom. So I almost have no doubt by mid-2024 we're going to see some cuts and the stock market returning. We'll see. A lot to talk about until we get to that point. But more pain ahead it looks like, but there's plenty of trading opportunities. TRKA the past couple weeks is evident of that. And of course, there's always put options when days like this happen. We'll see what happens though. The market did kind of get bought up. It looks like it's holding strong. Dow's over 400. The S&P's over 400, so it's holding in there. But I could see downside to maybe test that 375 level again. We'll see what happens. I appreciate you all for watching this video. I've been gone for a while. So many videos, so many ideas that I have to talk about. And yeah, we're going to get into them. Thanks for watching. I'll catch you in the next one.